All right. Brandon, thank you for coming on the show today. Really appreciate it.
Ed, I am pumped, excited, and ready to dig in. So fire away, man. Fire away.
Yeah, I've seen you on your TikToks. You definitely
I'm
get
so sorry.
excited.
I'm so sorry.
No. You have the energy that you have to have when you do that. There's another guy that I know. It's like his hands, and people go, "I get hypnotized by those hands." It's the same thing with you. Is you're very much, you have to be that way, and people want to see that, and it's very important. And but I know for a fact that your whole life hasn't been perfect, and because none of ours ever is. That's why we do what we do, and we take risks, because if we had a perfect life, we'd never take a risk.
This is so true.
Right? I mean,
yeah. Well, I started, it's pretty perfect. My dad gave me a loan for $80,000 when I'm just kidding. No, I'm just kidding. The $8 million loan from my father when I got started.
Okay. It was Mr. Trump. Mr. Trump. Yeah. I did it all myself with the $2 million loan from my dad.
Exactly. Yes.
No, but a lot of people won't know who you are on my podcast, because they don't know the part of you're in BiggerPockets, and you were the podcast host for a while. How long were you on that show?
9 years.
Wow.
Yeah, it's a long time to be on a show, but it was a great 9 years.
Yeah, but that's what got you to where you are now, right?
So much did. Yeah. I mean, and talk about mistakes, man. There were so many trying to build a podcast and a real estate empire at the same time, and an internet company, and there are too many to count. But no, all that got me to where I am today. And so I don't regret any of those moments. Yeah.
So what was your significant failure? And you don't have to pick them all. Just pick one, because the most that you, and then I'd like to know kind of what, how did it come to fruition, and how did it lead up to it, that whole 9 yards?
Yeah, I'll go on the real estate side. So I'm a real estate investor. Today I do a lot of big stuff like apartments and commercial deals, but that's not as relevant to most people that are listening. So I'm gonna tell a story from my earlier years. The biggest mistake, the most money I've ever lost in a deal ever, and the short story is I'm watching all these flipping shows on TV. You ever watch the flipping shows, right? Like Flip That House. Yeah, they're great, right? I'm like, I can flip houses. So I start flipping some houses, and I get really excited about this idea. And so I buy this duplex, this nasty looking duplex. I mean, there's like literally blood stains on the ceiling from where people were shooting up and all that. It was in a good neighborhood, had a great view, and it was just a giant duplex, 5,000 square feet. So I buy this thing. I'm like, I'm going to flip this house. And I start getting in there. And first of all, I go to I had a company, it's called a hard money lender. They lend house flippers money. And I'd used them a couple times on previous flips and had some success. And I go to this company and I'm like, hey, I got this new flip. It's amazing. It's 5,000 square feet. I'm going to turn it into a single family house. Will you lend me on the money on it? Like, let's go. And they said no. And they turned me down. And I was like, those a-holes. I was so mad. I was like, why would they not lend me the money? And so I'm like, well, screw this. I'll find somebody who will. So I go out there and I found another lender. I went and talked to a million people, find this other guy, this other company, and they're willing to lend to me. And they're the same way. They're like, well, we don't know if this is a good deal or not. It doesn't really look like it, but we like you. You seem to work hard. Okay, we'll lend you it. So a year later, I'm still working on this house. I'm there every day for a year. I'm fixing up myself. I mean, I took the staircase out of the mid. I took like the duplex and I added a staircase right up the middle of the house. I remodeled every piece of the house. A year of my wife, me, and we even hired a guy to work with us full time on this project. A year later, I put it on the market. We had bought the house for $50,000, like 50, crazy cheap. We put it on the market for like 180. Couldn't sell it for about a month. Dropped to the 170. Couldn't sell it. 160, 150, 140, 130, 120. It took 9 months to sell that house. I finally sold it for $120,000. I lost between $15,000 and $20,000 on that flip. And it was depressing. It was sad. I didn't have any money at the time. That was like a year of income for me at the time. So there's my mistake. And there's a lot of lessons in there, but we can dig in wherever you want.
All right. So what year was this?
This would have been 2012. So this is like the depths of the real estate pit.
And where was it? Where was it located?
Aberdeen, Washington, hometown of Kurt Cobain, Nirvana.
Oh, really?
Yeah.
What do you think was your biggest mistake, taking it from a duplex and put it in a single family home?
Yeah, a couple things. One, I should have obviously listened to the lender. Like lenders are there, like they're not making up rules for the fun of it. They're not making up on a whim. Like if the lender says it's not a good idea, I should have probably paid attention to that. I tend to get my ego involved and I'm like, what do they know? I'm way smarter than them, right? The guy who's like the lender actually had flipped hundreds of houses. The guy who's flipped hundreds of houses, I just didn't listen to, right? So that was mistake number one. Mistake number two, this is so obvious and your listeners are going to laugh at this, but it's so obvious today, but I did not realize it. The time and material and the time it takes and the cost of material to fix up a $5,000 house is 5 times what it takes to fix up a 1,000 square foot house. That never occurred to me. Like the size, just the sheer size of the project was so big that it took so much longer to work on and so much more expensive than I ever imagined. So, and I think it's just like a mistake. Like we just see house, and this could be in a business too, right? I'm going to go buy let's say you buy businesses. I'm going to buy $100,000 business versus $1 million business, or I'm going to go and launch, write a 1,000-word book versus a 10,000-word book, whatever the thing is. Like we just see book, house, business. So that was a little bit of a mistake. I should have realized how much work actually got into a 5,000 square foot house. I didn't ask anybody for advice in that process. I just went and just started working. And, yeah,
but I don't want to jump all the way to the end, but
sure.
Where are you now because of it? Right.
Yeah. I mean,
that was, if you're going to make a mistake, it's better to make it in the beginning.
This is true. This is why actually there's a lot of real estate guys out there like Grant Cardone. I like Grant Cardone for a lot of things, but Grant is really big on like, don't start with small deals, only buy a 50 unit or bigger. Like start with the $1 million plus property. This is the problem. It's like you will make mistakes. You can make them on a $50 million property, or you can make them on a $50,000 property. What would you rather cut your teeth on and learn and grow? Right. So I like the smaller deals for getting started. That's actually another mistake in my career, and I don't want to expand on that one, but I'll say it real quick, is that I stayed in the small deals for too long. I let fear hold me in these $50,000 properties in like the armpit of Washington State for way too long, when I should have been investing a little bit more outside my comfort zone. Like, okay, well, I did the duplex. Maybe I should try a 4-unit. Oh, maybe I should try a 20-unit. All right, I did that. Now what's the next level? Where can I go to next? And so I didn't do that. But yeah, I mean, that project taught me a lot of things that duplex to single family house flip I lost money on. I hired a guy. That was like the first time ever hiring an employee in my life. It didn't go perfectly, and I didn't know how to manage him right, but he was a pretty solid worker. He was like an old dude, like 70 years old, just retired, had free time on his hands. So he just came over and worked every day, would show up and work. So I got to kind of see like what happens when you have other people that can do work. So I wouldn't show up for a day maybe, and I'd come back and something would be done. I'm like, I didn't do that. So could I be where I am today with 100-ish employees if I didn't have the first, right? Could I run a marathon if I never learned to walk as a child? No. So learning leadership, I'm curious what your thoughts on this. Like, I've never read a leadership book that I was like, boom, that is a leadership book. Now I know how to be a leader. Like, you don't learn leadership. You can learn a lot of things from books. I'm an avid reader. I read 100 books a year, but I don't know if you can learn leadership in any other way than leading. Right.
And actually leading, and not being the boss, but be an actual leader.
Yeah. Actually leading, which that project taught me.
Yeah. Well, I want to bring this up, and I know it might not be the right time, but when you spoke at Steve Sims' speakeasy, and you brought up how you learned each segment to be, right? When you were talking about, you want to kind of go into that, because that's kind of where we could go from, is because you're talking about how you were doing it yourself, and then you hired your first person, and then you learned from there what you should be doing moving forward. Yeah.
That's a perfect segue, actually. I love that you brought that up. I've kind of like laid out my career in like these four mindset phases. And this story perfectly illustrates the first two. The first phase is very much like the DIY. Like my wife and I get in there, we start just doing stuff ourselves. Like we do everything ourselves. And forget real estate for a minute. This is any business. You could do, let's say you're a dog walking business. Okay, great. The way you approach business is one of these four mentalities. The first one being DIY. So I'm going to go find the dogs that I'm going to walk. I'm going to go walk them. I'm going to do all the work. I find the clients, I bill them, I do everything. At some point, a lot of people will then transition to what I call the project manager mindset, which says, I'm going to hire that 70-year-old guy to go and replace windows, or I'm going to go and hire the neighbor kid to walk my dogs. It's like you're still involved, but you're not necessarily doing the actual physical work. You're usually kind of loosely grabbing people that you know, my brother-in-law, my guy from church, whatever, and now they're doing the work. That's like project manager level. The next level I call the COO. That's like when you're actually running a company. Like you're the chief operating officer. You have deadlines and you have a team. Maybe you have a couple layers within the company. Like you are running a real business. And that is the level that I would say most entrepreneurs aspire to and never move past. They're still working 40, 50, 60, 80 hours a week. The buck still stops with them. They're still the one, like when everybody else fails, they're the one getting the call. But at least they can take some days off to go golfing. At least they get a little bit more enjoyable, a little bit more freedom, and they make a whole lot more money. And then the fourth level, I call the architect, or I also sometimes refer to it as the energy. So when I talk about that, think Richard Branson. Richard Branson owns 150 companies, doesn't work in any of them. He maybe answers some like high level questions, but he owns those companies from the outside looking in, not from the inside looking down at his company. Like he's like, oh yeah, that's a machine that I own over there. That's not me. And that's kind of like this fourth level that I've really been leaning into the last few years.
So you started 2012, right?
Yeah.
And when did you start BiggerPockets?
Yeah, so I actually started investing back in 2007. And funny story, BiggerPockets existed before I even came on board there. So not as a podcast, right? There was a little forum and a blog. And I actually found them in 2007 when I bought my very first property. It was a little crappy little house in the same town. And I remember going to Google and typing in like what to do when tenants don't pay rent. And I found this little blog. So I started like helping out and volunteering on the website, just answering questions and asking questions and just helping out. And then we started the podcast right after that. I think this was 2013. Right around that's when we started the podcast. So yeah, I think it was 2013. I met the founder, Josh, and we together started the podcast.
No, I was trying to figure out when you started investing versus when you found that. That's what I was trying to find. So because 2012 was the one that you made that had the biggest.
That was the biggest deal. Yeah, but I actually started doing little deals, like maybe one a year from 2007 up until 2012.
So, but the duplex was the one that cost you the most.
Yeah, that was the one that I lost money. I never lost money on a deal before that, and I've never lost money since then on a deal. But
what failure does.
I broke even on one. But you're right. Yeah, that's what failure does. Well, here's the crazy. This is the crazy thing about real estate, and it teaches a lot about failure, but a lot about real estate. And it's this: today, okay. Actually, let me tell you two things about that duplex. Number one,
time.
Yeah. Had I not, yes, time. That's where I'm going to go with the second one. But the first one is, had I not flipped that house, had I simply kept it a duplex, I would have probably spent $20,000 to fix it up and get it rent ready. That thing, day one of renting it, would have cash flowed over $1,000 a month in profit. $12,000 a year over the last 10 years would have been over $100,000 of profit, and rents would have gone up. It probably would have been cash flow 2,000, right? Over time, it gets better and better with rents, and I would have had this amazing property with tons of equity. And that's the second piece. Today, that property is worth over $500,000. I couldn't sell it for 120. Now we lived in an extraordinary market, right? The last 10 years, and that market really went up. But real estate is a very forgiving asset class. That's one thing I love about real estate is you hold something long enough, you're generally going to be fine. It covers a multitude of sins.
Because you can always write off the loss.
Yeah, you can write off losses, and you can just, if you get a fixed mortgage, like a loan that's the same too, like you might even lose the first couple of years, but rents tend to rise with inflation. And I think that's going to happen more and more as the government just keeps printing more and more money.
Rents rise, period. If you look back since they've been tracking rent, they've not went down. They've only been up. They might have like paused for a second, but then they went even higher. I've been in this industry and doing loans for 22 years, and I've seen everything, and I've never, but I've never seen what we just went through.
Yeah.
And then, I mean, the amount of money that was made in 2008 with the failures and the people picking up properties, holding on to them, some people flipping them and then selling one or two to pay for that one they're keeping or whatever they do is. And I know this is a business show, but it's really about, it doesn't matter what that business is, as long as you just focus on what you need to do and listen to professionals, listen to people who do it all the time and it made money at it. Don't listen to anybody who didn't make any money at it. But I mean, your biggest mistake was not listening to people, and you had people around you to tell you what to do.
Yeah,
or help you, I should say, not tell you what to do. We never want to be told what to do. We want to get help.
Ooh, that's so true. Yeah, it's funny because in my whole career, I've always been kind of like I'm opposed to getting help, and it's just an ego issue. I know it's a problem with my own soul. I just don't like asking for help, but when I do, it always benefits me. I mean, there's people with decades of experience. In fact, I had a friend call me out on that a year ago. So this last summer, now we do a lot of big deals, like I said, big mobile home parks, apartments. We raise a lot of capital. We had to raise $120 million in 6 weeks. Or maybe 8 weeks. It was crazy. We had to raise so much capital. We've never raised that much money before. And we had to raise it because we had so many deals that landed in our lap last summer. And I'm like, oh shoot, how am I going to do this? How am I going to, whatever. And one of my buddies is like, Brandon, I was on vacation. Well, I have a vacation house in Idaho. And he's like, Brandon, you're in the same town as Ken McElroy. Now, Ken McElroy is the godfather of like real estate syndication, what I do now. I mean, he wrote the book ABCs of Real Estate Investing and the Advanced Guide to Real Estate Investing. He's the one that got me excited about apartments. I mean, he is the man that does better than anybody else. He's in the same town as me. I'm on a boat with him out in the lake, going like hanging out on the 4th of July. And my he calls me out. He's like, you're struggling with this capital raise, and you haven't asked the one man on earth who understands this better than anyone else for help. Why not? And I was like, oh man, like just hit me. And I was like, you're right. So I went and took him out to lunch. I took Ken out to lunch. He laid out his whole business, how he does stuff. And I would say that one conversation, it helped me raise the capital. We finished it. We raised all $120 million. We've since raised another $100 million since then. We reorganized our entire company structure and the way we do everything based on that one conversation. It completely changed my life. The last time we raised $30 million in 24 hours just using what Ken taught me. Like, wow. Nuts.
Did you do a book on it yet?
I have not. And it was such simple stuff to Ken. This phrase I've been saying lately is get around people who make the impossible look like a Tuesday morning, right? Like to Ken, raising capital and like that, like it's just like, oh, it's just another Tuesday morning, whatever, just like a normal day, right? But for me, it felt impossible. When I look at my fitness goals, right? Like I want to get around people who like eating healthy and having a 6-pack is just like, oh yeah, that's normal. I mean, that's hard. What are you talking about, Brandon? Because that's who I want to learn from is people who make the impossible look like Tuesday morning. So that's what Ken did for me. And it changed my life.
Actually, I'm still shocked that you have a vacation home in Idaho and you live in Hawaii.
When you live in Hawaii, man, you like get a little bit like, I don't know. You miss the snow, you miss the winter a little bit. So, I had to have a place to go and check out the winter.
All Hawaiians I know go to the 5th island, which is
the Vegas. Yeah. Yep. We all go to Vegas. We do that too. Oh, that's funny.
So, all right. So for people who don't understand what syndication is, what's syndication? Because it has a bad theme to it because people think organized crime, but what's a syndication?
So it's not quite that bad. We do break kneecaps if people don't pay us, but syndication is simple. It's like a bunch of people together that are usually rich or richer. They are 6-figure earners, whatever. They're millionaires. They don't want to go find the deals themselves, so they all just pool their money together. And then they have a guy like me go out and find the deals and then manage the deals. So it's like we raise capital. We typically raise, again, somewhere between $20 and $40 million per deal. We'll go out and buy a $50, $60, $70 million apartment. All the money that we're raising comes from the investors. So they're pooling their money, and then investors get the majority of the profit. And then after certain thresholds, then me, the syndication owner, then I get paid after everybody else gets paid. So it's kind of a cool win-win because I have a team of people that are the best in the world at finding deals, vetting them, negotiating, offering, managing, all that stuff, and getting these huge loans. And so we do all the work with our expertise. The investor gets a good return on their money, and then we get paid at the end if we do a good job. And so it's a really nice, it's a good win-win, and it's going to make me stupid wealthy long term because when you buy billions of dollars of real estate and you generate billions in profit, even small pieces of that is going to make me very, very wealthy and continue to. But at the same time, it makes investors a lot wealthier too. And I would argue they get better deals by investing with syndicators usually than you would just going out and buying your own duplex. Like I can get you a higher return with 100 times less work. I wish I would have learned that in the beginning too. That's another mistake. I should have done a lot less a lot less toilet fixing, a lot more networking.
Yeah, because I was going to say a lot of people just look at it as taking on more responsibility and not seeing the return from it when you're doing onesie twosies. But
Yeah.
when you're part of a syndication, you can do a lot more, and you have
Yeah.
other people handle everything. You just get a certain amount of return on your money,
Yep.
and it's almost like having, so people can relate to it, it's like having a financial planner who
Hmm.
oversees your whole portfolio, but now you have somebody overseeing a portfolio of investment properties.
Exactly. Yep. And we try to do a good job. We try to, manage your money well. And the cool thing is, again, we're all aligned very, very well, because I don't make money unless the
Mhm.
deal goes well. So it's like, it's gotta go well, because I want to make $1 billion. So I'm gonna have to make you 10. So like we work. It's not quite commission. Like there's some fees and there's some other stuff, but we basically, the way the structure is, not to get too deep in the weeds, but typically the first like 7 or 8% goes like per year goes straight to the investors. Like, so if you give me 100 grand, the first $7,000 a year, like basically stock market averages, goes to you. And anything above that, we usually split about 70-30. So I'll take about 30%. My company takes 30%, and the investors take the 70. That's typically how it works. Some deals are more, some are a little less, but that's the structure.
Right. And then again, it goes back to a good financial planner only makes money when you make money.
Yeah.
They don't charge you fees just to charge you fees. They actually
Yep.
make the money. So you're basically, just so people can relate to not understanding the
Yep.
syndication, I'm trying to break it down for them.
Yeah. It's very similar to,
Yeah. It's
to
just an
your
easy way.
tire
I mean, it's not
planner.
exactly, but it's an
Mhm.
easy way to kind of understand it.
Yeah.
Right.
The downside is, I mean, like anybody can call themselves a syndicator, and there's lots of us out there.
I'm
Lots
hearing
of
it
guys that do this.
everywhere. I hear it
Yeah, it's
everywhere.
everywhere, right? Because I mean, it's a really good gig for me, right? I don't, and now I invest in every deal, but I don't have to, but I do because it makes my investors feel good. But like, I could buy a multi-million-dollar property, take 30% of future profits, assuming we do well, and put no money in. Like, that's a great deal for me. So imagine you're like, yeah, just a normal person. I mean, well, why not get into syndication? So the thing you got to look for, if just for everyone looking, is look for track record. Look for, do they have something to lose? Look for syndicators who put their own money in their deals. Look for ones that aren't living off their fees. Because like, we take a fee so I can pay salaries of my team, but like I don't touch that money personally. Now I could, again, nobody's gonna complain if I took it, but I want my investors, again, I want to raise $1 billion in the next couple of years. So I need every trick in my toolbox to get people to trust me. And I don't mean that in a bad way. Like, I need them to trust me. So like, I made it in a way that the only way I win personally, but Brandon Turner wins, is if the deal goes well. And because of that, I raised $120 million last summer in 6 or 7, 8 weeks. So yeah, look for people who have something to lose.
Well, and you did something that most people don't. Trust is huge these days. There
Yeah.
is no trust anymore.
Yeah.
You have to build that trust, and the only way you get trust like that is when somebody refers you to somebody else they
Yep.
know, and
Yeah.
that's how I work with, based on referral only.
Yep.
And that's because I don't want to try to sell somebody that I don't know
Mhm.
at all, because then they don't trust you, and all the time you're wasting on, and I don't mean it wrong, wasting, but
Yeah.
putting in time into it so they understand who you are. You could be doing something else.
Yeah. Yeah. It's totally true. It's like, yeah, the trust thing. It's hard to build trust with people, especially in an internet world where nobody like, and trust just comes from seeing people over and over and over and over and hearing them and knowing about them. So like, it's very deliberate. Like when I post on my social media, like I'm doing it to help people, but help builds trust. The
Mhm.
consistency builds trust. Podcasting for 9 years builds trust. Writing books builds trust. All those things just add trust, 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 trust. It's kind of Gary Vaynerchuk's like jab, 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 right hook.
Right.
If I can give for 10 years, when I have an ask, people trust me. And I think people underutilize that. They write for the ask, like, oh, they go right for the sale, they go right for the request, versus let's build trust first.
Well, it's much easier when you're authority in the industry,
Yes.
right? And you build that, because I was trying to explain to somebody, I've been doing radio for 5 years. I was in a documentary last year through the
Oh, no way.
ventures out of LA,
Yeah, that's
called
cool.
Hacking Real Estate, which I don't know if you heard of it, but it was
Yeah.
Hacking Real
Yep.
Estate Series. I was in that. I think the only mortgage person,
That's
and
awesome.
and then I wrote a book, right? And then
Yep.
now, so whenever anybody hears me or I talk or I do anything, I don't have competition much
Yep.
anymore.
Yep.
And so it's all about building authority. And that's what you did with the BiggerPockets. That's what you did by building with your books and everything else you're doing. Now you're doing it by, this is what I'm doing for you. I'm going to make money at the end. And that's
Yeah.
what I'm focusing on. And I know this is what you know, but I'm just saying you've
Yeah.
built a lot of authority by just doing education. And that's what I did the
Yeah.
same way. And
It's
if
huge.
you can't buy it.
Yeah.
You
Yeah. I
can't
just
buy that
started.
stuff.
I just started a new thing. I just launched a tribe. So it's called the Better Life Tribe, and it's the whole idea. It's kind of like a mastermind membership thing. You pay $300 a month, and I expected to launch with a couple hundred people. I launched with 1,000, which was nuts, like tons of money, right? But 100% of profits go to charity. So we're going to give away this year. I mean, just with the initial launch group, we'll give away probably $3 or $4 million, what we're projecting to fight human trafficking. Next year, I hope to quadruple that. The year after that, quadruple that. I want to give away $1 billion. Like, that's literally our vision. $1 billion given away in the next 10 years. Now, why am I doing that? Yes, I want to give away money. Yes, I want to do good and fight human trafficking. That is the primary reason. But the other reason, obviously, is like if I can give away $1 billion, think how much goodwill and knowledge, and like Brandon Turner is never getting on Joe Rogan. Brandon Turner, the real estate nerd, is not getting on Joe Rogan. Brandon Turner, who gave away $1 billion to fight human trafficking, that guy gets on Oprah and Joe Rogan and everyone else, right? So it's I'm going to pour in the next decade to helping people, not just getting rich through real estate, but actually helping people, which will come back to me somehow. I don't know exactly how. I just know it will come back to me. And so, you build. Like, play the long game, like educate, teach, grow, network, play the long game.
Yeah, because you don't get wealthy overnight.
You don't.
Unless you play the lottery.
Yeah.
And you could. And then you're going to lose it all.
You lose it all.
Because you go spend it like you have it forever. It's gone.
Yeah, go down to
everybody.
Go to the fifth island and come home much broker.
Yeah, it's funny how many people don't know that's the fifth island.
That's funny. Yep.
Yeah. I want to go really long with you, but I have a rule. I kind of keep it in 30 minutes. But what we were talking about in building authority and what you're doing, and I'm sorry I didn't get my invite for your tribe. So
no, man, I don't know why you didn't get it. It was in the mail. I don't know.
That's why, because my mail doesn't come.
Man.
My mail
we're gonna
doesn't
get
come.
You in. Man, we're changing lives. $1 billion. Come on, man, join up.
I will. Do me a favor, buy my book.
Or
at least. Yeah, because and I want you to, if you don't mind, I know I'm talking more, but if you wouldn't mind just to read it, I can send you a PDF copy if you don't want to buy it. But
I buy all my friends' books, man.
Yeah, I just want to, because I want other people who actually are in the industry to understand. Yeah. The only thing in the whole book that was changed was when I was writing it was in 22, and I said, well, at least rates aren't 7 to 13%, right? And then it came out and it was coming out, and I'm like, do I want to change that? No, I don't want to change that, because eventually we're not going to be there anymore.
Yes.
We'll be back into the 5s and the 4s by the end of this year. And I'm like, and that's really what I want. It's not going to be perfect and, that kind of stuff. So what I'm getting at is failures and things you do. Don't worry about them being perfect.
Yeah.
Do the best you can and get really good at it later, right? You'll just do it, get it started, and move forward. Like if you're going to be investing, read everything you can and then get out there and do it.
Yep. Yeah. Just this morning, I was writing a story for I'm going to make a course soon on real estate for Inside the Tribe. But I wrote the story there I'm going to open up the thing with. And it's about two farmers who both discover, they live in the small rural town. They both discover they have oil, like deep oil underneath their crops, like right underneath where they're planting their crops. And they've been planting crops for years. I've been, planting, reaping, all that harvesting, like tilling up the ground. It's hard work, right? They both discover oil. And one of the guys says, oh, that oil is like a quarter mile down there. There's no way I can get to it. And, I don't have the expertise to know how to get an oil well. I don't know how to build one. I don't have any money. I can't do an oil well. I guess I'm not going to do it. The second guy, though, and so he just continues to plant whatever. The second guy says, you know what? I'm going to figure it out. And he starts asking other people, hey, how did you build your oil well? How'd you make your oil well? He starts looking around the county, around the countryside, who's got oil wells, learning, gets a book on oil well building, right? Builds an oil well. And guess what? It breaks on him first day. He's like, doesn't work. But he's like, you know what? He takes it apart, rebuilds it again. Lasts for a week, breaks again, but now oil's flowing, right? And finally, he gets the thing working and it's making oil. So he uses all the money to build another oil well, and then another one, and then another one. And whenever they break, when they're not perfect, he makes mistakes, he did stupid things, he fixes it, addresses the problem, gets it working, builds another oil well. And pretty soon he's just spending every morning at the coffee shop with all his buddies, not having to work his land anymore. And the first farmer comes back in, looks at him sitting there and says, must be nice to be so lucky to have oil just popping out of the ground. I couldn't do that. And then goes back to planting, tilling, and harvesting day after day. And it's such a great picture, I think, of like, this is what most people in life do. They just work, because it's too hard. They don't want to make mistakes. They're afraid. They never build oil wells. So my encouragement for people today is go out there and build some oil wells. I don't care if it's real estate, business, or something else, but build some oil wells.
Well, that is so true. I want to go to your luck thing real quick. Luck is where
Please.
opportunity meets preparation.
So true.
And everybody's like, "You're lucky." No, I've worked my
Yeah.
butt off to get there.
Yep.
And
Yep.
and don't get me wrong, I still make mistakes myself to the day. And this last downturn we had, I didn't see it coming as fast as I should have saw it coming. But
Yep.
I know what's going to happen on the other side. It's going to be different. It'll be better. But
Yeah.
back to your story about the farmers, I think that's an excellent story, and I think you should start whatever you do with that. Brandon, how do people
Thanks, man.
find you?
Yeah, I'm an Instagram nerd, so Beardy Brandon over on Instagram, also TikTok, Beardy Brandon. But yeah, that's my main channel, beardybrandon.com. And then I have a website, beardybrandon.com as well, where you can join my text message newsletter if you want random text from me.
Yeah, that's great. And if you're not watching this, he's got a long beard.
I do have a very awkwardly long beard, and I'm trying to grow it longer, but it's slowing down. I can't get it to go longer.
Yeah, I finally shaved after so many months. I was like, I just got tired of every time I took a drink or whatever, you had to draw your beard.
It's true. I remember being 7 years old also. It's okay.
Brandon, thank you so much for being on the show today. I really appreciate it.
Hey, thank you, man. I appreciate it.
And you gave some really good knowledge, and we really appreciate it.
Thank you.
And thank you again.